hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, we saw quite a bit of a panic sell-off in yesterday's trading session. We saw deep cuts in yesterday's trading session, and we will see if the selling continues in today's trading session as well. Yesterday was a partial nightmare which came true for the Lal Street. This came in as investors were jolted by fears from all three fronts as well. Geopolitical tensions in the Middle East, diversion of flows from India to China as Chinese markets continue to surge, and the impact of the new F&O regulations on liquidity. Now today the gift nifty is pointing to a negative start. We have pre-opened rates as well the pre-opened rates also point out to a negative start for the Indian markets. If we look at the global handover, they were mixed. US markets ended flat while Asia Pacific markets started off mixed this morning. So we will be talking about that later in the segment as well. Plenty of things lined up in the show. Don't forget that we will be taking up your stock related queries with our technical expert and understand how they look on the charts. So keep posting them in our live feed and we will try to address them before 9:30 a.m. For now, let's take a look at the top headlines this hour. Wall Street shaky start on October continues. Stocks largely end lower ahead of September jobs report. The geopolitical tensions continue to affect equity markets. Asia Pacific markets open mixed. Markets following a weak global handover from the Wall Street. Meanwhile, the gift nifty is indicating a lower start for the Indian markets. Crude oil prices surged 5%, wherein Brent nears $78 per barrel. The US President Joe Biden says that Israeli strikes on Iranian oil facilities are being discussed. Meanwhile, gold prices remain range-bound at around $2,650 an ounce. Q2 business updates start to trickle in. Avenue Supermarts see revenue rise 14% year-on-year in Q2 update, whereas Bajaj Finance see revenue jump 29%. So if we take a recap of yesterday's trading session, we saw Sensex and Nifty registering the biggest intraday fall in 2 months. Sensex cracked about 1800 points while Nifty was already down by 550 points in yesterday's trading session. Now this came in as investors started to digest the new Sebi's F&O regulations. The sentiment was also bogged down due to global factors like the escalating tensions in the Middle East and the China stimulus, which is expected to move the FII flows away from our expensive and overbought markets. Now, the technical weakness was on the charts and experts had pointed out, so no surprise on that front. Right now, experts have been looking at Nifty to sustain above that 25,000 level in order for a rebound. But we will be expanding on that later in the segment as well. We saw yesterday all the sectors were down. India Wix also shot up by 9%. So there was an unease prevailing in the markets. Even in the pre-open rates, we have been suggesting that, the markets are going for a negative start as well. If you look at the option queues data, Nifty put call ratio rose to 0.88 levels from 0.83 levels, indicating that some of the bearish trend is here to stay. In the F&O ban list, Granules India, Manappuram Finance were the new entrants, whereas Bandhan Bank, Hindustan Copper, RBL Bank, they continued to be a part of the list. None of the stocks were out of the F&O ban list. If you look at the foreign fund flows data, that has been quite interesting. We saw FIIs continue to sell for the 4th day from the Indian markets to the tune of 15,000 crore rupees. Now this marks the largest sell-off by the FIIs this year. But DIIs, they were the helping hand in the markets. They poured about 12,000 crore rupees in yesterday's trading session. This was also the highest single day purchase by the DIIs so far this year. But on that note, let's quickly get on board with our technical expert of the show, Nirav Chheda of Nirmal Bank. Nirav, good morning. So good to have you on the show.
Thank you.
Nirav, we saw technical weakness in yesterday's trading session. Experts were also pointing out that, there have been overbought conditions. So can we expect further downside, and how much quantum of a downside can we see for Nifty from here on?
Yeah. So, good morning, Lavisha. See, Nifty at this point, you've seen about 1,000 point cut in Nifty in just about 4 or 5 days. And this has been huge. This whole week probably we've seen selling. Importantly, supports of 26,000, 25,500 have been broken, and they had been decent supports with good put built up around those areas, and that is why we are seeing, this downward trend where Nifty can probably come down towards that 25,000 levels again, which is the next big support area. Highest put base is around that 25,000 levels. So at this point of time, host of supports also lie at these 25,000 odd levels, with the 50-day moving average also placed around this area. So yes, for longs, this would be a support area and also a stop loss. If that this gets broken, we can probably see selling intensify, and probably a lot of stocks facing huge selling pressure. So definitely, this is one level to watch out for. Your stop loss should be placed at 25,000 levels on the futures. If that is broken, just exit. That would be the message for everyone. Having said that, generally, in this whole uptrend in the last 1.5 years, we have seen Nifty give these downward ticks for about a week or two, and then again witness buying. So yeah, definitely, I believe the buying should come in, and 25,000 levels should, be a good support area and a good reversal point.
All right, that is the point that we will be watching out 25,000 levels for Nifty. But opening rates on your screen, we can see Nifty flat in the red, 25 to 42 levels, which is holding right now. But Sensex, that is down about like 140 points. It is 82 356 levels at this point of time. If you look at the advance and decline ratio, we can see 247 shares have advanced while 212 shares have declined. So market breadth slightly in the positive, but then we will be seeing how it is. If you see at the screen, we can see Nifty has been a bit of a range bound. It is flipping towards the red and as well as the green as well. But among the sectoral indices, let's take a look what is doing well. If we see yesterday's trading session, we saw a broad-based sell-off. All of the sectors were dipped in the red and they settled lower as well. But Nifty Auto, that is flat in green. Nifty metal indices, that is also popping in the green, while Nifty PSU Bank, that is also popping in the green as well. We're seeing a little bit of a recovery that has been happening from the opening rates as well. A lot of sectors that actually started off red is seeing a mild recovery, and it is trading mildly in the green as well. But other than that, we can see Nifty Realty Index, that has been quite the laggard from the past. In the recent sessions also, Nifty Realty indices haven't been doing well, given that the housing sales for the third quarter saw 11% year-on-year slump as well. But what is doing well on the charts for the Nifty 50 index is ONGC, HDFC Life, Maruti Suzuki, Bharat Electronics and TCS. Among the top losers on the Nifty 50 has been Bajaj Finance. Do you know that Bajaj Finance came out with its Q2 business update as well, where we saw that the OM had risen by about 29% year on year in the second quarter business update as well. BPCL, once again, it has not been doing well. Yesterday also we saw that it was one of the top Nifty 50 losers as well, given that the Brent crude oil spiked about 5% in trade, and still now it's still holding above that $70 per barrel as well. Others like Asian Paints, Cipla and Trend, they also haven't been doing well in trade as well. But Bank Nifty, let's take a look at Bank Nifty. It is again one of the laggard, and Bank Nifty is down now for about fifth day if we count today as well. And it is off about 5% from its record high levels. So it is almost losing what it gained in the recent bull run. Nirav, for the Bank Nifty, can we see further downside as well? Now that NSE also might also have to keep one index derivative for its weekly expiry as well.
Yeah, see, I believe Bank Nifty is probably the stronger of the two indices at this point, because it hasn't really moved up much, and the selling that has come, yes, definitely it has been intensified, but Bank Nifty is near support of 51,800 odd. It has just broken it in the opening, but definitely believe some good support does come in at 51,800 to 51,700 levels, with host of supports at this place. Also, the 50-day moving average is around the same area. So I believe a good reversal point is in place, and this is where one should start buying in terms of banks, because I do see some short covering action coming in here. Probably the likes of HDFC Bank, SBI, and the larger cap banks will see buying coming in, which will help the bank nifty move up. You can buy with a stop loss of around 51 450 on the spot, and probably 52 500, 53,000 odd levels is what I'm expecting in the next few days to come in.
All right. We'll be watching out for those levels for Bank Nifty as well. But one stock in focus, BSC. BSC yesterday came out saying that they plan to keep its blue chip index Sensex for weekly contracts, while Sensex 50 will be discontinued from November 15 onwards. Even BankX will be discontinued from November 18 onwards. Nirav, we saw BSC up about 8-10% in trade yesterday. So today it has cooled off from yesterday's rally. So what does it mean for investors? And how is BSC looking on the charts as well?
Yeah, Lovisha, see what a beautiful rally this stock has given, from sub 160 odd levels in the last couple of years. You've seen this come up above that 3900 levels. Definitely, the stock of the last 2 3 years. A height of higher bottom formation is in place, but at this point of time, I see a lot of volumes at the higher end, and I don't like that. Generally, very heavy volumes near the highs signifies a form of distribution, and I believe this is a good place where people can start booking profits here, because there is a chance this stock can probably come down again, probably up to the 3200 to 3300 odd levels, which is where probably it will make a base. So yeah, book profits to a certain extent in this stock, and wait for some downside to again buy in.
All right, so book profits at this particular level. But Bajaj Finance, it is one of the top Nifty 50 laggard as well in today's trading session. It came out with its second quarter business update. They showed about 29% year-on-year rise in OM in second quarter, while new loans booked also rose about 21% year-on-year. Now we are seeing good traction on the deposit sides as well, which rose about 21% year-on-year in the second quarter update. But Nirav, on the charts, we haven't seen significant gains for Bajaj Finance. Today also it has been one of the top Nifty 50 laggard. So how does it stack up for the near term as well?
See, on the chart doesn't look good. Frankly, the stock has been in a consolidation for more than 2 years now. In fact, from 2021, the stock is in consolidation. I don't see it, coming off this consolidation very soon. Probably a downward tick below the 6,000 levels will only, see the stock coming out of this whole consolidation. So yeah, at this point of time looks bad. The overall chart pattern is not very exciting, and also the fact that it has touched a upper base, which is around 77 to 8,000 odd levels, and it is coming down since. I believe now it is going down towards its lower base. So if you're holding longs, just exit. Probably good time to get into the stock might be around that 6,300 to 6,000 odd levels.
All right. Bajaj Housing Finance, the recent listed entity, today has not been doing well, but that also came out with its second quarter update yesterday. We saw its OM increase about 26% year on year to go past that 1 lakh crore mark as well. And OM at the end of the second quarter stood about like 1 lakh crore as well. But on the charts, Bajaj Housing Finance, since we already discussed about Bajaj Finance as well, Nirav, but how does Bajaj Housing Finance look on the charts? We saw quite a bit of a stellar rally after the stock got listed as well. But what does the near-term trends suggest?
Correct. So, see, this is a very new listing, first of all, and generally, with the new listing, generally those stocks move up, and then there is a long consolidation, a long pause, and that is what is probably happening here. I don't see much upside from current levels. This is making a kind of a flag pattern, and probably some more days of consolidation still left. So you can probably get into the stock once that consolidation is over or a breakout of 165 level comes in. But up till then, I would suggest, to just hold on if you're already holding on to with a stop loss of around 135, and probably, just play out this consolidation for a while.
All right, play out this consolidation for a while. But let's straight dive into some of the viewer queries as well that is coming on our live feed. The first query is coming in from Satya. He's asking, please ask the best levels to enter Varun Beverages. Nirav, what do you think Varun Beverages? The stock hasn't been performing well, in the 1 month or even in the 6 month charts as well. What is the best entry point for Varun Beverages? Do we expect a further underperformance and then maybe the investor can enter the stock?
Yeah, see, this stock has had a linear uptrend from 2017 onwards. From 21, this stock has gone up towards the 600 levels. So there was bound to be some consolidation, after so long. There's a 8 straight years of, upward bias for this stock. Now the overall chart pattern looks a little weak. There is a good chance of some downside even in this stock. Probably, 500, 480 odd levels can come in. That can be a good entry point, not before that. So at this point of time, do not get into the stock, very early. Let the consolidation play out. See, after, this whole 1.5 2 years of rally, most of the stocks are witnessing consolidation and probably can see, some downside, but that is healthy actually. One should actually wait on for this consolidation to get over and not really buying at current levels, from a medium term perspective. So yeah, I mean, let the consolidation play out for this stock as well and for most stocks, and you'll get a good rally post that.
All right, let the consolidation play out then. But another stock in focus is Paras Defense. ARK is asking that he's holding the share at about 25% loss right now. So he's asking that is it a good time to average out or will it fall more? Is there any future in the stock where it will go up again? Paras Defense, the stock is down 15% in the past 1 month. Nirav, the defense stocks have been coming out of flavor as well. But for the near term, can we expect some uptick as well?
Yep, defense stocks, all the defense stocks are down. They are all down about 20-25% from the highs. For defense, there was a huge rally. After this huge rally, generally this is what happens, for every sector. There is a phase where, some downturn comes in, and that is what is happening here. In terms of Paras defense, good support area is around that 950 odd levels, and that is where I believe it will take support and again move up from there. But up till then, you will have to hold on to it. If you cannot, just exit it.
All right. So that is the view coming in. But another query coming in from Pon Rajesh. He's asking the views on Lemon Tree. Lemon Tree, Nirav, be it 1 month, 6 month, the stock has been underperforming as well. And Lemon Tree, the management did guide for better margins from the second quarter onwards as well. But on the charts, how does it look like for the near term, Lemon Tree for you?
See, this chart is a little dangerous. It's a rounding top kind of a formation, which generally, a rounding bottom is a very strong formation, and rounding top is also very strong formation on the downside. So at this point of time, doesn't look good for this stock. This stock can probably come down towards those 90 odd levels, going forward. So I would just be skeptical to buy the stock at current levels. In fact, I would be a seller. If you're holding on to it, just exit it. So important supports are broken, and unless this stock goes up above 140 odd, only then I'd be a buyer again, but not at current levels. Probably, at 100 or 85, 90 levels is where I'll be a buyer.
Okay, so quite a tricky stock, Lemon Tree. But another stock query coming in is for Vishal Dave. He's asking his views on bail. PSU stocks, Nirav, at this point of time, can we expect some weakness in the near term as well? Because, in the past 1 month or 6 months also, bail hasn't been doing well. PSU stocks are also coming out of flavor as well. But for the near term, what do the charts indicate for BHEL?
Yeah, see, basically this stock has done very well, and the resistance of 370 odd is strong one. 325 to 375. That has been a multi-year resistance for this stock, and that is where this stock has come down from. I don't see it coming down a lot. The overall structure is positive. Probably 250 or 245 is where I believe this stock will take support and again move up. So this is one of the few stocks which looks good even at current levels. Yeah, probably 2 4 days of consolidation, then you'll see again this stock firing up. So you can hold on to this. 245 should be a stop loss.
245 is the stop loss. Another query coming in from Itup is on the view on Syngene for the long term. Syngene yesterday, it was in focus as the management said that they eye recovery from the second half of this fiscal year and they plan to triple its biomanufacturing capacity by the next year as well. But Syngene on the charts, Nirav, how does it look like for the near term?
Yep. The chart is good actually. There's a good consolidation. Post the consolidation, the breakout comes in. The breakout has just come in. The stock has come down to retest the breakout. So this is a strong formation. It is just near the support area. The support starts from 870 to about 850 odd levels. A host of supports lie in between those. I believe the stock can again turn around and see some buying coming in. So one can hold on to this stock at current levels. 840 should be a stop loss. Possibly, I believe 950 to 980 is where this stock can come up to. Probably even higher, but that is where you start booking profits.
All right. Another stock in focus is Avenue Supermarts. It came out with its Q2 business update. The standalone revenue rose about by 14% year on year, whereas total number of stores stood at 377 at the end of the September quarter. But then again, the stock has performed negatively in the past 1 or even 6 months for that matter. Nirav, have most of the positives already been priced in? Because brokerages in the morning also pointed out that, the valuations do not look attractive at the current levels. So can we expect certain underperformance for Avenue Supermarts from here on?
Yeah, I believe so. Yes, important resistance around that 54, 5500 levels, which was not broken, and then support has been broken of 4900. I believe this stock can come down. It can probably come down towards 4200 to 4000 odd levels. So yeah, the underperformance should continue, and one should not be buyer at this point of time. Probably look to buy around that 4000 odd levels.
All right. Um, okay, final question, Nirav. What are your trading picks at this particular point of time? We've seen excessive rallies. Now we are seeing a breather of that. So, what are your trading picks at this point of time?
Yes. See, this is a very tricky question because we are in such a situation where market is already 150 points down now. But yes, I expect some pharma to be a good defensive bet at this point of time. So Granules India is looks very good at this point of time because this stock had come down from 700 odd and there is a strong reversal in place. This stock can again move up from current levels. You can look to buy this stock at current levels with a stop loss of around 570. I expect 640 to 650 is where this stock should come to in the next few days. So that would be your target. Second stock that I like is IEX. Again, similar pattern with IEX, a good rounding bottom kind of a formation. But this stock also came down from 250 or to about 200. But good reversal is in place now, and short covering is seen. So I believe this stock is also primed to move up towards that 225 odd levels. One can look to buy this stock at current levels with a stop loss of 197.
All right, IEX and Granules India, that is the pick coming in from Nirav. But thank you, Nirav. Thank you for taking the time out, addressing viewer queries, and sharing your trading strategy as well. We hope to connect with you soon.
Sure. Thank you.
Okay. Let's take a look at the markets. It has deepened its sell-off. Initially, it started off flat and then, blinked towards the green as well. But right now, Sensex is down about over 300 points. Nifty is also down 100 points as well. It is, it's still above the 25,100 mark, but still, we can see an extension of the sell-off from yesterday's trading session as well. Majority of the sectors have been blinking in the red. Nifty IT slightly positive. It is flat in trade, flat in the green. But all of the indices not doing well, be it metal indices or even the realty indices. Realty indices, it was down about 1%, but now it has extended its cuts, 3% down in trading session right now. Nifty auto also not doing well. It is about 1% down in trading session as well. Apart from that, India Wix, that is one of the highlight. It is shot up about 4%. Yesterday also we saw about 13% spike in intraday deals, but then it settled about like 8-9% higher. But now, right now, it's like an extension of the spike up, and it is up about 4%, trading about that 13 levels as well. Among the top Nifty 50 gainers, we have ONGC, SBI Life, HCL Tech, TCS, and Sun Pharma, which is doing well. Among the top Nifty 50 losers, we have BPCL, Bajaj Finance, Trent, Hero MotoCorp, and Asian Paints. So, crude derivatives, once again, they are seeing a batter in today's trading session as well. But all right, on that note, let's get on board with our fundamental analyst for the show, Aishvarya Dadheech of FIDENT Asset Management. Aishwarya, so good to have you on the show. Good morning.
Good morning. Good mornings to all the viewers.
Aishwarya, what is the sense of your markets right now? Because we saw a fall yesterday, and today also we see an extension of the fall. When do you expect the markets to rebound, or are the concerns big enough to rattle markets ahead as well?
So obviously, we have seen lots happening in the market, both in India as well as global. Especially, we started with when China's authority came out with a very accommodative stance on monetary policy, and we saw a very sharp, uptick in those markets where the different indices went up almost between 20%, almost 30% in his if I may use that word, around 4, 5, 6 sessions. And at the same time, we saw that geopolitical risk in the Middle East increased manifold after this Iran attacking Israel in that thing, and the expectation of Israel retaliation on that front. On plus, the data which is coming from US, all of this is giving indication that kind of a risk of scenario is building up in the market. And given India being an expensive market, it will always be on its toes to see this volatility to pan out. And on top of it, if you look at last 5-7 days, the two things which has primarily hit India, which has fueled the fear index in the last 1 or 2 weeks, is obviously one is the dollar index. If you see, the dollar index has strengthened, that the green currency has been considered strong given the geopolitical crisis which is brewing up in the last 2 week or so. And at the same time, the crude which was getting into this bearish territory, all of a sudden see a strong uptake to almost 70 cents, $70 Brent, compared to a low of 73, 74 in just 2, 3 sessions, is possibly giving a hint whether the Fed could possibly take a pause on inflationary trend. Obviously, we have this data coming on Friday on the unemployment rate and jobless claims and all of that, which will give us more inclination. But for Asia as an area, both the dollar index, crude, and the receipt of from India to China, given the way China has created this excitement about reviving their economy, is possibly not favoring Indian market. We saw yesterday what kind of outflow that FI have sold possibly have a bearing on the market. And I believe till the time we have clarity on how the geopolitical risk will pan out, we believe this volatility is here to stay.
Okay, all right. Volatility is here to stay. You talked about China's stimulus and the money moving out from the Indian markets as well. But at this point, should investors hold on to their bets and increase their cash positions?
Yeah. So if I look at two things specifically on China and compared to what Indian investors should do, Definitely, China is a very lucrative market given the valuations that they are trading at, even in spite of the run up. But what I understand is that China is still in the mess. For them to completely revive and go on a growth phase is going to be a daunting task. It's not going to be very easy. So obviously, this excitement is having a lot of this hot money of FIs moving there and try to chase those return. We can't deny that. But India will continue to remain a strategic, investment opportunity for FIs, especially for the passive flows. So I'm in that camp who believes that India's story has a very long-term, I would say, strong edifice to support. And this flow, obviously, the last 4 months we have seen close to almost $13 billion of inflow by FI. After the outflows 4 months back, I believe this trend will continue when this sanity will, both of this geopolitical risk as well as this China excitement settles down. And India will continue to see inflows given the kind of growth we are sitting at, given the kind of macro stability we are sitting at, and obviously the political comfort compared to what we have in China. Obviously, we can't compare this market. China the whole market cap of China is close to $10 trillion, where India is little shy away from $6 trillion, where the GDP of these two countries almost 5 times the size. The one of the most important reasons is the way the political framework, where we have more ability to extrapolate and predict the future earning possibility, which is very limited in China. So I don't really see too much into it about China's valuation and money flowing there and will possibly continue, which I don't believe that will happen. Coming back to India, I don't see investors any need to panic. We have seen it in past also, where whether it was Russia, Ukraine, we have seen it when it happened with Gaza and Israel. There will always be an impact on market because we are at a very stiff valuations, and there is a little room for error. But if I really look at the way it will impact Indian economy is very, very limited. Obviously, crude has spiked up 5-7% in last 2 sessions, but it's still lower than 10% year on year, right? And on the top of that, the kind of cartelization which is not working within OPEC obviously has a huge supply, and China is not out of the woods, so that will also impact the growth part. So I think India is in a very sweet spot. We are entering this quarterly result very soon. We will possibly see good revival. Interest rate cut is around the corner. So I will advise Indian investors to stay put, to stay calm, and stay on their stories which have a very strong earning trajectory.
Okay, all right. Broking stocks, they were hit yesterday, given that, Sebi rolled out some new F&O guidelines as well. And, many experts also pointed out on the impact on the trading volumes as well. But the likes of BSC, Angel One, they did well in yesterday's trading session. So what is your expectation? Is the fall legitimate, or how much can these broking companies brush off their impact?
No, I believe this is a welcome move. The way the kind of volumes has spiked up by this retail investor segment who possibly are not equipped, I would say, both from technical perspective as well as a fundamental perspective. I think that was going to become a bigger systematic risk. And I think what Sebi has done is pretty nice attempts to bring down the risk from the whole perspective. And on top of it, obviously, if you look at those companies specifically, say PSC or Angel One and all of that, I believe the bigger impact will be on the discount brokers compared to players like this. Every company has a strategic, move they will play out with this new regulatory diktat. So to speak specifically for BSE, I believe it is a blessing in disguise. The BSE thesis has been working on because of their market share gains over the last 2-3 quarters, and with this dictate of limiting the expiry or on weekly basis and also on giving them a dedicated day, I think it will become easier for BSE to gain market share, both on national basis and on actual basis. So I think this will play out well for BSE, but it will be lately difficult for brokers who are doing all those, I would say discount brokers, because volumes definitely will take a hit. So as far we have seen, only that index derivative has been brought up in that ambit of regulations, and large part of the volumes in options and futures happens on index. So those volumes will definitely take a hit, but it will not hit the exchange, in a way the market is expecting. But obviously, it will have an impact on discount brokers for sure.
Okay, all right. Let's see, how the impact is going to be more on the discount broker side. But we have some business updates which have trickled in for the second quarter as well. Brokerages, however, they have pointed out that Q2 won't be as surprising quarter. Yes, there will be some sequential rebound in growth terms from the first quarter. But do you see this disconnect between current values of the market and growth expectations of investors to disappoint sentiment going ahead as well?
No, so obviously we are starting this quarterly season this week only, and if you look at the what market is expecting is almost anywhere between 12 to 14% kind of an EPS growth for FY26. The number will be above 1100, close to 1125 kind of an EPS number for Nifty 526. But if you look at the last quarter which went by, we saw a very muted performance. So the H2 of this financial year will have to do the heavy lifting. Now, when we enter this quarter, I don't expect too much of miracle happening around. Now, we have seen so far from the likes of FMCG companies where like Dabur on a specific reason has I guided for a very muted set of numbers, whereas Medico has indicated obviously that things are not that bad. Similarly, if you have seen majority of these BFSI companies, like I think HDFC Bank also reported their pre-business update just before we start. So banking sector is also poised to report decent set of number. No fireworks is what we can at least see. I think the surprising thing could come from possibly from IT as a sector and possibly from discretionary part of consumer. But I don't expect too much to happen on this quarterly season result because a lot of this we have seen majority of this company has been hit hard because of a very strong monsoons. So a lot of these activities has been postponed in the last 2 to 3 months. So cement could be one of those sector, constructions, real estate. Those will get major impact from that perspective. And again, if you have seen on FMCG side, obviously growth has been decent, but there would be some commodity-led inflationary benefit because that has gone down. So it will be sector to sector thesis playing out. But I would say we have to closely watch. Not expecting too much of happening out of this quarter, but if there is not any further downturn on EPS earning growth and we don't see those financial 26 EPS coming down in a single digit number, we are good. I think we are good with that perspective. So let's see how it pans out for the next two to three quarters.
Okay, all right. But any sectors that you see could see some re-rating after the Q2 results as well?
I would closely watch out for sectors in IT, as I said. I believe that is one sector where I want to see whether the discretionary part is really picking up. We continue to see the estimation of IT sectors, growth is pretty healthy, where we're seeing a number going from almost 1% to 3% for large IT players. If that happens with the background of rate cut, I think IT can see some re-rating potentials. Again, I would closely watch out for chemical companies as a sector. I believe that is one sector which have another 2 to 3 quarters of pressure on companies' revenue. But if we see some green shoots happening across revenue growth or volumes, I believe that re-rating is pending in this particular set of companies, and that could be an area where could interest that many investors there. And third would be obviously would be the discretionary pie. We are already seeing QSR companies in the last 3 4 weeks have seen a decent ramp up happening. It's basically a quasi discretionary pie. Similarly, if I see in other sectors, obviously you see the way cold plate tickets were sold. So there's a very strong discretionary pie which should do well. So I would be watching closely into that segment. I believe if they perform well, that's re-rating is on the radar.
Okay, so IT FMCG names that needs to be watched out. But Aishwarya, you also mentioned that interest rate cut path by the RBI, could turn as a tailwind for the Indian markets as well. But now that the RBI MPC meet will be holding their meeting next week as well, what do you expect? Do you expect the central bank to embark on an interest rate cut path, or are they expected to delay it, maybe to the remainder of the year or next year as well?
So there are two things to it. Obviously, with the change in the situation in the last week, with the rise in the geopolitical risk, and especially the spike in crude, I believe RBI will try to go in a wait and watch mode, where they want to see how this actually pans out, and what will be the impact on the crude and obviously on inflationary trend in India. We are sitting on a very comforting inflationary trend so far. Then in that case, we were initially expecting that the RBI will possibly do couple of cuts. Even everyone, we believe that it will be a hollow cut, not compared to what Fed is doing. At most, we will see 75 pips cut for the whole interest rate cut cycle for India specific thing. So not really much from equity market perspective. But I think given this outcome in the recent last week because of this geopolitical thing, I think it will be advisable. I think RBI will go ahead and see whether we are okay if crude doesn't spike up, then possibly they will take a decision. So most likely in this upcoming, I think it's on 9th, they will try to be in the wait and watch mode and see how things will pan out on geopolitical side. And just one comment on crude. Obviously, crude is getting a lot of excitement, and that is what is hitting the market as we speak. But I believe crude doesn't have a lot of I would say strategic demand drivers to really put it and go into much higher level that we have seen in the past. So until and unless really China picks up in the next couple of quarters or so, we don't see crude really going up. So I think it's going to be tough call for RBI for specifically for this month's for policy date, but possibly I think they will defer it in the coming quarters to take the cut.
Okay, so you don't expect the crude to take off as much as maybe like another $10 per barrel as well. Okay, so thank you, Aishwarya. Thank you for sharing your insights. Pleasure speaking to you, and hope we connect soon as well.
Thank you so much. Thanks for it.
Okay, so on that note, let's just take a quick check of the markets once again. It has seen a bit of a recovery from the previous minutes that we were talking about. Sensex is down about now like 160 points, while Nifty is flat in the red as well. Majority of the sectors they were seeing a bit of a red in the negative territory as well. But Nifty IT metal indices, they are doing well. India Wix now down about 2%, holding above that 13 levels as well. Top Nifty 50 gainers continue to be SBI Life Insurance, ONGC, Tata Motors, Wipro, Maruti Suzuki, while top losers on the Nifty do include BPCL, Bajaj Finance, Cipla, NTPC and Hero MotoCorp as well. But on that note, we have come to an end of this edition of the Opening Bell. Don't forget to tune in to 3:30 p.m. for Closing Bell. Until then, stay tuned to moneycontrol.com for all the news updates and market insights.